Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. It has been a quiet day, quiet week of trading so far. Monday and Tuesday, most of the majors have remained in a very narrow range, with it seems traders taking off the beginning of the week, with it being the 4th of July in North America on Wednesday. Heading on to Thursday, we could get a pickup in activity with the ECB and BOE announcements, and then on Friday we definitely have the non-farm payroll report, which is due, which is normally the most volatile data point put out in the U.S. markets. Until that time, though, we'll probably see range-bound trading. If we do have any news that's released, we could see quite a spike from that because the lack of liquidity that's in the market, similar to the release last Thursday in Asian markets of the provisions by the European Union. Let's take a look at a couple of the pairs. The first one we're going to look at is the Euro-USD. I would expect that any move down towards the 125.60 area will probably be supported in the Euro-USD until Thursday trading. If we get a move down here, we probably can find buyers for a pushback higher, and 126.30 should maintain the pair. But if we bust through that, we could test the trend line up above, which comes around at 126.70. On a broader aspect, with the news on Thursday, any move higher or lower would initially be capped by the resistance and support zones from the triangle. But if we break above to the top side of the triangle, we could easily move up to 127.50 and then towards the 50 fib, which is a 127.84, 128 area. This should act as a strong resistance zone in the short term. Another pair that's actually in a very tradable position right at the moment is the USDCAD. As you can see, the CAD has moved down and is testing the 50 fib level from the move up from the May lows. This can be attributed to, I guess, the with oil actually gaining a bit of traction once again. And I guess the general dollar weakness across the board. If you could play this either one or two ways. I don't really have a biased opinion at this moment, but if we get we could get a bounce right here off the 50 fib level, and then we would probably move back up towards our first level of resistance would be at 102. And if we could get a more pronounced move, we can move back forward to the 102.30, 103.50, but I would expect with this lack of liquidity and lack of participants, we would probably range in between this 50 fib and the 102 level for the next day. If we do break down, the next logical target would be the 0.618 fib level from the move lower, which comes around 104.7, 105.50. So it's a level to watch. The next pair that is interest is just the Aussie, because it has traded in such a narrow range so far this week. It is basically trading between the 102.20 and the 102.90 area. So you can see that's a 70 pip range, but it has drifted higher. So if you could play any moves to the top of the range towards 103, or actually if it ever gets up to 103.50, has a chance to short the pair. Let's take a look at the other mirrors. The New Zealand USD, very narrow range between 80 and 80.60 so far this week. You can play that for short-term scalps if you want to. And the last pair we're going to look at is the Great Britain USD, because similar to the other majors, let's get it off a 15-minute chart. It has been trading in a relatively quiet range so far this week, and you can see it has a very strong support zone that comes in down here between the 156.60, which is by the 0.382 fib, and the 156.50 price support level. This creates a strong support zone. I don't expect any move, especially in low liquidity, to be capped in this area and be a buying opportunity. And then any move up to 157.20 has acted as support so far this week, so we could remain range bound so far in that area. So that's this Currency Watch. Everybody in North America, have a happy 4th of July, and I'll see you guys on Thursday.